Welcome back to our channel. You work too darn hard for your money to let Uncle Sam take a big chunk of it every year. Today, we're diving into some of the best strategies to help you earn tax-free income and put more of your money back in your pocket where it belongs. We're gonna tackle this head-on and give you the tools you need to win with your money. Let's get started. Now let's talk about earning tax-free income. That's right, money you earn and don't have to pay taxes on. One way is by selling your home. If you've lived in your home for at least 2 of the past 5 years, you can exclude up to $250,000 of your profit from taxes, or up to $500,000 if you're married filing jointly. That's a heap of money you get to keep. Another way to earn tax-free income is by saving for your children's education with a 529 plan. These plans let your money grow tax-free, and you won't pay taxes on the withdrawals when you use the money for qualified education expenses. It's a win-win for you and your kids. And don't forget about municipal bonds. These bonds are issued by state and local governments, and the interest you earn is often tax-free at the federal level and sometimes even at the state and local levels too. It's like getting a little extra back from your community. Next up, let's unlock the power of tax credits. These are like gold nuggets when it comes to saving on your taxes. Tax credits directly reduce your tax liability, dollar for dollar. That's right, a dollar saved in taxes is a dollar in your pocket. Think of it like this: if you owe $5,000 in taxes and you qualify for a $1,000 tax credit, you'll only owe $4,000. That's a real difference maker. Now there are tons of tax credits out there, so do your research or talk to a tax professional to see which ones you qualify for. For example, if you're thinking about buying a new car, consider an electric vehicle. The government offers tax credits for those, which can save you a bundle. And if you're looking to make your home more energy efficient, there are tax credits for that too. New windows, insulation, solar panels. These upgrades can not only save you money on your energy bills but also on your taxes. Now, let's talk about deferring your taxes. This is like getting a free loan from the government. It's not about avoiding taxes altogether, but rather delaying when you have to pay them. And hey, time is money, right? One way to defer taxes is by postponing a bonus from your job. If you can, ask your employer if you can receive the bonus early next year instead of at the end of this year. This can be especially helpful if you know you'll be in a lower tax bracket next year. Another powerful way to defer taxes is by investing in retirement accounts like IRAs and 401ks. When you contribute to these accounts, you're reducing your taxable income now and letting your money grow tax-deferred until retirement. It's a smart way to save for the future and lower your tax bill today. Chapter 4. Maximize deductions. Don't leave money on the table. Listen up, folks, because this is important. When it comes to taxes, you've got to take every deduction you're entitled to. Don't leave money on the table. There are 2 main ways to take deductions: the standard deduction and itemized deductions. The standard deduction is a fixed amount that reduces your taxable income. For 2023, it's $13,850 for single filers and $27,700 for married couples filing jointly. It's a simple way to reduce your tax bill without jumping through hoops. But hold on, sometimes it makes more sense to itemize your deductions. This is where you list out specific expenses that you can deduct from your income. These can include things like home mortgage interest, property taxes, charitable donations, and medical expenses. It takes a bit more work, but if your itemized deductions exceed the standard deduction, you'll save more money. Chapter 5. Lower your tax rate, long-term thinking for big savings. Now let's talk about lowering your overall tax rate. One of the best ways to do this is by earning income from long-term investments. We're talking about things like stocks, bonds, mutual funds, and real estate. You see, when you hold these investments for longer than a year, any profits you make are taxed at the lower long-term capital gains rates. These rates are significantly lower than the ordinary income tax rates you pay on your wages. So, by shifting your income towards long-term investments, you can keep more of your hard-earned money. It's all about playing the long game and building wealth over time. Chapter 6. Income shifting. Share the wealth, lower the taxes. Now this last tip is for those of you who are in a higher tax bracket. It's called income shifting or income splitting, and it's a perfectly legal way to reduce your overall tax burden. The basic idea is to shift some of your income to someone in a lower tax bracket, like your children or grandchildren. You can do this by gifting them income-producing assets like stocks or bonds. Since they're in a lower tax bracket, they'll pay taxes on that income at a lower rate than you would. It's a win-win situation. Now I know what you're thinking, Dave, this sounds complicated. And you're right, it can be. That's why it's essential to talk to a qualified tax professional before you start shifting any income around. They can help you make sure you're doing everything above board and maximizing your tax savings. Take control of your taxes and your future. Thanks for watching. We hope these tips help you save on your taxes and keep more of your hard-earned money. Remember, you work too hard to let Uncle Sam take more than his fair share. By being proactive and using these strategies, you can take control of your taxes and your financial future. Don't forget to like, subscribe, and hit the notification bell for more financial advice. And be sure to share this video with your friends and family who could benefit from these tips. We'll see you next time.